Hello and welcome to the FinTech Finance Virtual Arena. And today we're going to be talking about payments, from leveraging real-time to cross-border. We're going to be talking about one of the most innovative verticals in finance. So who better than to join me today? I have Dag-Inge Flatraaker from DNB and Edward Ireland from Bottomline Technologies. Guys, thank you so much for joining me here today. Dag-Inge, could I please get yourself to introduce your role at DNB and also what DNB have been working on in payments, please?
Yes, sure. Well, I work in the group area in the bank, which is called Payments and Innovation, where we are in a way coordinating that area in the bank. DNB is the largest, by far the largest bank in Norway. So we are covering most aspects of banking, but we are also one of the most digital banks in Europe. And if you look at the landscape, the society in Norway is very much digital, and we have introduced Bank ID solution, who is now used by everybody, the public sector, private sector, banks, so everybody is now connected and are to the bank or to the public authorities, tax authorities, health, education, whatever you have. And and when you look at the payment story, we have the highest number of electronic payments per capita in Europe, at least, and we have almost get rid of cash. There is only 3%. The number of cash transactions in Norway is only 3% today. It's almost erased. Sorry. So that's a bit of a background. But of course, there's a big change now in the market. And the highest focus on our side is, of course, to create value for our customers and take away friction and really to create the consumer convenience and the business value added we can create. And we are not only working in isolation here. We are really working with partnering with the lead in fintech, global tech, or other banks, other places where are leading innovators. So there's a lot of things going on, and what we call the industry and what we can call the shift of industries, where other industries are moving beyond their traditional roles. They're also moving into the space of banking. So, and the same, we are in a way also doing the same. We are moving out of banking into other value chains in order to facilitate and create the best solutions for our customers.
Well, that is really exciting to be able to hear about that changing role of a financial institution. That's been offered up by that huge uptake of digital that we've seen in Norway. So I'm really excited to get your input later on in the session. Thank you very much. And Edward, can you give us a bit of background to your role at Bottomline and what Bottomline do in the payment space, please?
Yeah, thank you very much, Doug. So good morning, everybody. My name's Edward Ireland. I work for Bottomline in the product management area. I'm our lead on ISO 20022, which is one of the major standards initiatives coming up in the market. As a company, Bottomline are a payments aggregator. Our financial messaging division, based out of London, Geneva, and Singapore, is one of the leading aggregators globally, especially as a Swift messaging bureau. We're particularly focused at the moment for the biggest. We've had one of the busiest 6 months of our time as an institution, really working hard with our customers over the recent period to bring on the digital innovation that they've been looking to do and has really been accelerated by the current climate. So it's a fascinating time right now, and I think we're moving into a really busy 12 to 24 months of innovation and change for the payment space.
Yeah, I completely agree. And really to kind of, add a bit of gravitas to the session, I would really like, Edward, if I could get your perspective on what were some of the biggest technological changes in the payments industry that have led up to this situation where now we're exponentially, as you said, in the next 6 to 12 months, going to be changing the way that payments are dealt with dramatically.
Yeah, it's interesting. So I've worked in financial messaging for a number of years, about 20 years now, and certainly in the beginning of my career, nothing happened in payments particularly. It wasn't the area of messaging that was of any particular focus. It was all about securities and settlement and increasing STP and so on. And payments really stayed the same. But over the last years, as you said, there's been a real step change. And I don't think that that's come from any one particular change, but it's come from a range of opportunities and changes and regulation and initiatives that have prompted this change. And I can call out just some of them, I think, that are some of the more relevant items that have had an impact. I think the introduction of APIs has created a tremendous opportunity in payments. It's made people realize the ability to improve the processes, but also to offer so many more services around payments. Open banking has been a major initiative. It's been supported by the regulators. It's encouraged innovation. It's encouraged new parties to come into the market and existing players to up their game and provide new services. Some of the market initiatives like the Swift transaction management platform and the introduction of ISO 20022 had major impacts for the community and really got them thinking about how they manage payments and how they're going to manage them in the future. We've had a whole raft of new institutions come into the space. So we've had people like P27 initiating all the new payment service providers, the encouraging of small challenger banks by the regulators in different countries. That's all triggered innovation and change in the payment space. And then we've had an opportunity for much better compliance that's come into the payment space as well. So driven by requirements, we've had a number of issues which have really needed to be addressed, and that's really prompted the payment space to change the way that it looks at payments and to realize the opportunity to do so much more with payments in terms of monitoring, visibility, understanding transactions, real-time monitoring of payments, looking down into the detail of payments, where payments are really going, what are the underlying transactions, and really providing a much more comprehensive service around payments. So I think those are some of the major changes that I've noticed that have had an impact on the industry.
I mean, it's almost leading up to the perfect storm, isn't it? So, I mean, with that, Dag-Inge, if I could get you to kind of have your input, and obviously from the Norwegian aspect, as we've mentioned already, there's been such a huge societal change. But do you think, open banking and the regulations in Europe, obviously Norway being out of that, but I mean, has that also had an impact on Norway? And can you see that open banking regulations might have been the leading cause of innovation in the sector rather than the technology?
Yeah, well, from a starting point, we are not out of it because we are very much into it, because we are part of ESA, the European, part of the same economic area. So all the EU regulations are also introduced in the Norwegian context. And of course, we are operating in Europe, so we are very much into the same ballgame when it comes to the flow of regulations, because it's come directly into our own home turf. So what we see now is a combination. There is a high ambition now in Europe in order to make the digital Europe. And they have introduced a lot of things, such as PSD2 and other things now to enable that. And they have also introduced now a new strategy for digital and for payments in Europe. And what we see now is really, as you said, a new wave of regulations coming. What they want to aim for now is instant payment becoming the new normal. That means really to bring instant payments on side of cards, which is very important, but to bring it in all the user cases where we can see cards today. So we are not only talking about the traditional bill payments and those kind of things, but we are really talking about in-store payments. You're talking about E&M commerce and all that stuff. So that is one part of it, and they have said something about they want to even regulate it further to achieve that. And at the same time, we have PSD2, which have enabled what we call access for third parties in order to enhance competition, so they can initiate payments on behalf of customers, reaching accounts in banks to do that, also for information purposes. And what we see now is that the Commission are planning next phase, and that is beyond payments. That is an open banking framework. They have said that will come something in 2022 that will open up more than we see today. So that's the environment we are living in. Of course, it's a very competitive environment. But I think the most important thing, that is important to drive changes, yes. But the most important thing is what we have seen the last many years on technology. And the technology are then leveraged by new platforms, and we are talking about especially the global platforms, the GAFAs and some others, who really are taking very strong positions on distribution, on using information, and having very strong brands, and are able also on the content to bring in and compete with services in the fields of others, but they also take a strong position to be the marketplace of the future. So, and they are really advancing technology, and so do we now, in order to be flexible enough to give the services we need to give to our customers. But I think the combination of that, because now we see a very, very big drive toward change. And we see a lot of new models. We have seen it for years, but it matures. And so it creates new opportunities for people and businesses, but it also creates a lot of new types of services, much more flexible. And the terms and the business models are changing. And some parties are taking very strong positions, as I said, because they have this kind of very strong brands, global presence, and are controlling very much the distribution side. They are facing all customers. They are interfacing all customers. So in a way, the combination of all this are really changing the market now. So it will be a big change the next few years.
And it's quite exciting, isn't it?
Yeah, it's quite exciting.
Hearing that technological and cultural shift, I think it could lead to massive change. So, I mean, the whole purpose of this is to really kind of see how we can leverage this new technology and this new payments culture. So, Edward, with that in mind, do we now have a chance, effectively, for banks or payment companies around the world to actually change the way that we look at payments as a whole? Can we start seeing potentially greenfield new uses of technology, like coffee shops paying their employees on the day rather than every month at the end, this 28-day cycle, which isn't possibly very good for people that are working on a shift-based basis?
Yeah, I mean, I think we're seeing that today. We've got a number of customers that are paying pensions daily to some of their customers. So that's definitely happening today. Yes, I think we are going to, if we were to go forward 5-10 years, the payments landscape is going to look very different to the one that we see today. Do I think that it's going to change overnight? No, I think that payments evolve. They've always evolved, and they will continue to evolve. So there's no sudden change from one practice to another. So we'll see new technologies come in. We spoke about open banking earlier. Open banking is a really important part of it. The fact that the regulators have got behind it really helps consumers to understand and to trust it. As a concept, it's great. But I think without any regulatory oversight and encouragement and if you like, then it would be very difficult for it to come in. We're naturally quite conservative about payments. They're critical to our business. Businesses go bust because they run out of money. We need to be really careful about the way that we manage payments. And so any change to the way that we make and handle payments needs to be very carefully considered, and institutions and individuals aren't going to move across to new ways of doing it very easily. I know that people talk about sort of the younger generation being more open to different types of payments, but we're still going to be very careful. We're not going to lose sight and track of our money. But having said that, the way that we manage money in the future is going to be different, and we're going to have many more opportunities to manage it differently and to use other parties to manage that money. So I think we're always going to have the banks in the background, but who might be in the foreground for an institution or an individual could be quite different. So we've got the bank in the background providing the balance sheets, the lending and the facility, but who's actually doing the payments and providing that granular information to customers could be other parties and not necessarily financial institutions. So I think we are going to go into a very interesting space, but I think it's going to evolve. It's going to happen gradually. We're going to put in incremental changes, which will take us to that space.
Interesting. And Dag-Inge, I'd actually love you to chime in at that point, because at the beginning, you mentioned how DNB are looking to branch out into other services. Maybe does DNB have a strong enough brand that you can still have that front of end service as well as being that back end provider? Or is that very much a Scandinavian option, and maybe in the UK it might be different?
I think it will be combinations here, but I was listening into this and that the banks are being in the background. That's absolutely not the aim, what we are trying to do. But of course, we need to work flexible on this, because we need to partner up with somebody. But we also have shown ability to be in the forefront and not in the background very much. So the aim will be that we really are out there and having the customer interface and are solving the problems and the issues and the frictions for the customers. And it's different ways to do that. We have a very good example. DNB created a company called Vips some years ago. This company was a payment app, has evolved, and I would say it revolutionized payments in a way, very quickly, because it became it penetrated the market in very short time. I have never seen. I think we got the 2/3 of the population very quickly to use it.
Wow.
And it's used by everybody, and as a brand, this bypassed all other brands, not only banking type of brands, but really the broad set of brands when we talk about recognition and well, how people are evaluating a brand, because it was so useful for people. And this Vips is a kind of unicorn in that sense. But of course, a lot of the strengths so far has been that the banks in Norway, for example, have worked together to create very good, let's say, services, joint infrastructures to enable what we call the very strong competitive market with very competitive services. But of course, today we also need to work with fintechs to find the best solutions. We work with the global techs and are always looking into that space. We work with the other banks that are a bit apart, but they're still leading in their area, where they have, so we can share good ideas or solutions. And we are working with other branches, and we are even moving into taking positions in other areas. But what we see is, for example, airline companies are moving into kind of banking, consumer finance, for example, with the loyalty and everything. Yeah. We see a lot of change in other businesses also. For example, in the ERP for businesses, and how they are starting to interface more and more the corporates, which we have traditionally done. So we work with them, of course, in order to find best solutions, but we are also moving into that space ourselves, because in order to be able to have the value added created for our corporate customers. So there is no standstill here. Everything is moving. Yeah. And we are not sitting and waiting and being on the backside and let others do the distribution and because then somebody else decide the content and interfacing of customers. So we will, and we are preparing ourselves to be the attractive part, visible in the front. And there are different ways to do that, as I said. But to have very, very good solutions, creating value for customers is absolutely a must.
Definitely, and following on from that, Dag-Inge, so I mean, with the culture of payments becoming high volume, instant, low value as well, which I think is critical, especially from the traditional banking model to make money off payments. Do you think this is just a natural progression of banks around the world having to change their role and the way they interact with customers, since traditional payment methods and payment revenue streams are diminishing for some banks?
Yeah, I think this is a global thing, because you have global players out there, and they are going into new markets with their things. So this is not a local thing. This is really a global thing, and it will change a lot of. So if you're not prepared, you're in a bad seat, I would say. Yeah. So you really need to be prepared, and you need to start early on the changes. So we started for a long time ago, and progressing. So I think it's quite important, but you know, there are so many uncertainties also in this market, well, we already see, you know, the evolution of Cryptocurrencies, the central banks are moving in that area. We have the Libra, and that could also have a big impact if you talk about, for example, the payments industry over the next years, not a couple of next years, but if you look 5 years ahead, 10 years ahead. And we also have this very quick evolution on technology with new capabilities of processing much faster than today. Yeah. And who is going then to, and then we also need, of course, to have in place trust and security. And I think that is the strength of us and the banks, that we have a tradition to do that, and we will continue to do that. And I think also the regulators will see that you need in this digital evolution to have absolutely trust. If you don't have the trust, you are not achieving the public goal of a digital society. So, and there we are very strong, I would say.
It's a really quite important role, and I think a lot of people, as we've mentioned from the beginning of the talk, are quite conservative when it comes to payments, especially about their money. So I think that role of the bank is critical. But moving more onto the tech side then, Edward, if the bank has that role as the safe bet, I mean, what can the tech providers do on top of these payments to kind of provide a value-added service to the banks and to their customers? With all this transaction data, are there some kind of really interesting things that customers of banks will start to be able to see in the future?
Well, yes, there are. Yes, and to Dag's point earlier on, it's really great to see the banks taking up the challenge, because this market's got a lot more players in it now. There are people trying to compete, and the banks are stepping up. They realize that they have a great position, they hold the customer, and they understand the technology, and they've got the experience to build out new solutions. And so they will be very strong in this space, but at the same time, the other players are in there as well. So, I mean, if I call out a couple of initiatives that I see, so you've got the Swift transaction management platform. So Swift have, since the 1970s, been a messaging provider. So they send and receive messages on behalf of institutions. Now, this year, they're introducing a transaction management platform. So they're changing their architecture to become a new type technology. So that's a really good example of just how much change is happening, and how trusted technology providers are coming in to provide solutions. You look at Visa and MasterCard as well, moving out of cards and trying to move into corporate payments with Visa B2B, and MasterCard's solution around personal payments. So you've got some of these really large institutions moving into new spaces and providing solutions. And I was saying earlier on that we've just gone through one of the busiest 6 months that we've had. And one of the reasons I think that is because we're a trusted party in a period of unprecedented change. And it's the banks and the trusted technology companies and those who are established that have got the opportunity to bring these new services out. And at the same time, we are being challenged by these smaller companies who are coming with great solutions and really innovative ideas for individuals and institutions to provide additional services. And I think that, to Dag's point, I think partnering with these institutions is going to be really important, because it's a combination of the trust that we have with the customers and the new ideas and the new technology that they have that can come together to provide a solution for customers. To answer your last question about, do I think there's new opportunities around some of the additional data? I think that's a really important point. So as I was saying at the beginning of this call, I'm part of the ISO 20022 proposition from Bottomline. And one of the main things about ISO 20022 is the level of information that we're going to see in payments going forward. So if we look at, and you'll forgive me, I'm coming from a UK background here. So if we look at a BACS payment with local low value payments in the UK, the level of information in the BACS payment for that payment was nominal, really nominal. It's pretty much the value date, the amount, and the name of the person. And you look at what we're going to get in ISO 20022, and it's a step change. So it's so much more information is going to be in that message. You're going to be able to understand the underlying transaction. You've got full details on beneficiaries and parties within the chain. And from that information, we're then going to be able to provide so many more services. We're going to be able to link that payment. We're going to understand what that payment really is and what it's for. It's not just a payment anymore, it's a transaction which relates to a sugar trade, which relates to the manufacture of goods, etc., etc. And then as an institution and as DNB or a bank, we can then provide a whole range of other services on top of that, just from understanding from the payment.
Interesting. And I mean, one of the exciting things as well that I brought up in our preamble as well is how we're going to leverage cross-border as well with all those new technologies. So Edward, if I could stay with you just for the moment, where do you see cross-border payments going in the future now that we're in this ecosystem of instant low-value payments and customer demand is now at an all-time high? Especially when they're seeing those value-added services you just mentioned. Where are cross-border payments going to go, and how can we possibly manage customer expectations on that?
Yeah, so I suppose there's two things I would call out. I mean, there are obviously many more, and I'm sure Dag would have some to put in as well. But so there are two things that I would call out. The first one is the increasing links that we're seeing and that we will see between different real-time payment networks. So linking up between real-time payments in sterling, euros, US dollars, Hong Kong dollars, Singapore dollars, etc. These real-time payment systems are going to start to be integrated so that institutions and individuals can start to make real-time payments cross-border. So I think that's going to be really interesting. So, you know, gone is the sort of 3-day cycle or the 3-day myth, because it's never really 3 days, but that idea is going away really quickly, and it's going to be the real-time payment networks that contribute towards that. And the second thing is some of the initiatives like the SWIFT GPI Universal Confirmations Initiative. So what this is going to do, I think, is going to give institutions and individuals a whole new level of expectation around payments. Payments in the past have been a little bit of a fire and forget concept. So you initiate a payment and then you wait for it to arrive at some point and the beneficiary to tell you when they've got it. What we're going to see with GPI and universal confirmations in cross-border payments from SWIFT is real-time visibility of the status of that payment. So the individuals and the institutions that initiate the payments and the banks that initiate the payments are going to be able to track those payments through their life cycle and see when they hit the beneficiary without having to be told about it by the end beneficiary. And that sounds perfectly normal if you're thinking about, for example, sending a parcel, but for payments, it hasn't been normal, and it's now going to become the norm. And there's a lot of work going on in the industry now to become compliant with universal confirmations. And there's a lot of increased adoption of GPI as a program. And as we start to feel the benefit of that over the next 6 to 12 months, I think you're going to see this expectation become the norm about visibility of cross-border payments.
Absolutely brilliant. And I mean, Dag-Inge, I've got to get your input on this, because obviously I think Scandinavia has worked quite well in linking up a lot of these cross-border payment systems. Can you tell me a bit more about that, please?
Yes, I can do a bit also to dig into what Dag said about the evolution of international payments as such. We are very much into it, the GPI. We are also one of the pilots in part of the low-value payments of SWIFT. And you know, the corridors that are being created could be real-time corridors in the sense of connecting different instant infrastructures around the world, which is going on. That discussion and piloting and solutions are really happening now, and we are very much part of it. The traditional problems has been the predictability when it comes to payments, the time it takes, and it has a lot of burden on corporates when it comes to working capital, liquidity, and that kind of things. That is now totally changed. Most of the GPI transactions now are taking minutes and not days. It's taking minutes, few minutes. And there could be that we are moving towards more real time. Wherever you send transactions globally, then you have the corridors in place. But at the same time, when you look at the aspect of international payments, we need to be to ensure what we call AML, fraud, and the capability of SWIFT with the new platform now and the GPI and everything. It creates what we call, it's a cloud-based. There is the golden copy of all transactions that are accessible for everybody from it's entered into the system to it leaves the system. So instead of having the burden of trying to find out when you have false positives, whatever you have, find out and investigate where the transaction is and why it's delayed and why there is some problems, you will always know where it is. And normally it will only take a few minutes. So it's a totally changed environment for international payments now, and it will evolve based on what SWIFT is doing. So, but also that there are discussions going on now how we can have a much stronger control on transactions. We will have ISO 20022 migration now. SWIFT are doing it. We are all doing it. And there's much granular information and a structured information. So it will create much more possibilities to protect yourself against fraud, to ensure that you can trust the transaction. You can filter it perhaps one place instead of doing it everywhere. And you really can also build the value out of the information. Information is today the gold, as we know. And SWIFT is owned by the users and banks. And it's not only banks, it's all the users also. It is not owned by anybody, it's owned by the users. The traffic is deciding the ownership. So the value of SWIFT is coming back also to the owners. But you asked me a question now related to some in the Scandinavia or in the Nordics. Yes, we are all moving when it comes to preparing for ISO 20022. Also improving our instant payment solutions and clearing systems, and the central banks are also moving ahead in the with the same aims. Volume P27 is one example, which is covering now Denmark, Finland, and Sweden. And DNB is operating in all those countries. So we are part of P27 when it comes to the Swedish, Danish, and krona. In Norway, the decision of how infrastructure is evolving there is of course based on the banking sector and the central bank. So we are doing that upgrades separate from P27. But at the same time, there is a split between the infrastructure companies and those creating the schemes and rules. So we are working together in all the countries now on what we call the Nordic Payments Council, who is a mirror of EPC. We are working in order to have common schemes types or common rules, common standards, so that we can harmonize also the Nordic markets and bring it very close to what is happening in SEPA in Europe. So what we see now is a migration towards much more harmonization of payments all over.
Amazing.
So it's quite an interesting evolution there.
Yeah, and before I wrap up, I actually want to just go back to Edward to ask him about following on from that harmonization. You mentioned about the real-time payment networks finally linking up and actually having a bit of connection there. I mean, when is that going to be a realistic possibility?
Well, I think it's to my point earlier on. I think it's going to evolve. I mean, there are various initiatives around the globe already, which will help that. SWIFT themselves are introducing some of the real-time payment network confirmations into their GPI platform. So that's a single window on that, which helps with initiatives towards cross-border real-time payments. You've got people like Visa B2B who are initiating their processes, which is giving real-time cross-border payments. So I think that it's those types of initiatives that you'll see. I don't think you're going to see the schemes coming together, that you have single regulators across jurisdictions. So it's going to be a matter of collaboration through the technology companies and technology providers and network providers who can support that interoperability. But to Dag's point earlier on, I mean, ISO 20022 is going to be a major driver of that, because we're now talking about having payments in the same standard. So we've got a common understanding across schemes and across countries and across regions on what that payment means and what's within the payment instruction itself.
Absolutely brilliant. And Dag-Inge, to wrap up, could I ask, you've mentioned a few exciting things that DNB are working on. But what do you see in the next 6 or 12 months, shall we say, that DNB are really going to be able to showcase in this brand new, very exciting payments ecosystem?
Well, we have a lot on the table. I couldn't tell you all that because it's we can't release all what we are doing. But we could see a move towards more frictionless payments, and we can also see a move where we can take new positions based on moving into new territories. So we have a more, let us say, a better position of footing to create what I said, the value for the customers, and get down frictions. They could. I couldn't disclose anything now because it's a lot of discussions going on.
There's a lot of talk going on. Well, brilliant. And Edward, could you also, could you give our viewers a bit of overview of what Bottomline are going to be working on for the next couple of months and years?
Yeah, of course, and I'd be happy to. So, I mean, I think that if we think about payments far into the future, I think they're going to be easier, they're going to be safer, they're going to be more transparent. That's the future of payments. But in the meantime, and in the shorter term, I think things are going to get a lot more complex. We've still got the legacy technologies, we've got the new technologies and new capabilities and new schemes and new standards to implement. And as a company, we're here to support our customers and the market in providing an aggregator proposition. So we can support our customers to onboard with the new propositions, to maintain their legacy infrastructures and to move across to the new infrastructures. So it's providing that aggregator proposition that is going to be our main work and our main business over the next 6 to 12 months.
Excellent. Well, both of you, thank you so much for joining. I think that's all we have time for. So, and to all our viewers as well, thank you so much for watching. You can catch the rest of the series and much more over at www.fintechf.com and of course, YouTube and LinkedIn, where I'll see you there. So thank you once again, both of you, and I hope you have a lovely day. Goodbye.
Thank you. Bye.